This is Arlan Suderman, Chief Commodities Economist at StoneX, coming to you from the trading floor in the morning of Wednesday, June 24th, with an update on the markets and what's impacting them longer term today as we look at the fog of war. The fog of war continues related to the United States and Iran, with the two parties giving very different accounts of what has been agreed to thus far. That's largely because both parties must worry about how their stakeholders view the agreement. Both sides also are trying to shape public opinion on the other side. President Trump wants to shape public opinion here in the States ahead of the midterm elections, but he also wants the people of Iran to see the United States as their savior, so to speak, saving them from the brutality of the Revolutionary Guard. On the other hand, the Revolutionary Guard wants to build distrust of President Trump into the minds of voters here in the States, while also projecting an image back home that it remains fully in control and not weakened at all by the war. The truth has big implications, not only for the stability of the region, but also for the commodity sector. So what do we know? First, we know that shooting has largely stopped. It could start again at any time, but for now it has stopped. Ships are moving again through the Strait of Hormuz at an increasing pace. The range of estimates on the volume of oil and product and other freight moving out of the Persian Gulf varies tremendously, largely because some of the ships are still transiting the region with their transponders turned off, indicating the amount of fear and uncertainty that is still present. But it looks like several dozen ships per day are now passing through the strait. And that's a tremendous improvement, but it's still well below the 80 to 130 ships per day that passed through the strait pre-war. Now, part of that is because most of the flow currently is ships heading out of the strait, out of the Persian Gulf, with a much smaller number, just a handful of ships thus far, heading into the Persian Gulf to pick up loads. Restoring economic activity means restoring the flow of ships in both directions. It's one thing to release the hundreds of ships containing cargo that were previously trapped in the Persian Gulf. That provides a surge of product to the world. But the bigger indicator would be when we see a surge of ships returning to the Persian Gulf for crude oil and other products to keep that supply flowing. The United States has control of frozen Iranian assets. That's been the case for a while. Iran can only access those assets if the United States chooses to release them, and that's the point of contention. Has the United States released them or not? Now, the White House says that it also has control of oil revenue flowing from the sale of Iranian oil, but that also cannot be confirmed. The Trump administration says that Iranian assets are being released via the purchase of food and medicine for the people of Iran. That cannot be confirmed yet either, but that message is flowing consistently now from a number of different sources within the White House. The consistency and persistence of the message does give it some credibility. The Trump administration insists that the resources will be used for, among other things, the purchase of U.S. ag commodities to feed the people of Iran. Now, Iran purchased 18 million metric tons of corn, soybeans, and wheat, mostly corn from Brazil, in 2025. That was calendar year 2025. Iran hasn't made any meaningful purchases of ag commodities from the United States since 2018. It has little desire to do so now. As such, any confirmation of ships loading with U.S. ag commodities for Iran would provide confirmation of the White House's statements. We thus far lack that, but that's not a surprise. That will take time. Here's the bottom line for U.S. ag commodities. Seasonally, this is a time when they tend to come under pressure in the absence of any notable weather threat. The weather forecasts currently look quite favorable for the bulk of the Midwest corn and soybean belt over coming weeks, and that's largely due to a strong El Niño developing right now, with water temperature anomalies the hottest they've been on recorded history for this time of year, keeping us on pace for that anticipated super El Nino. That could change at any point. Those forecasts could, that could change at any point, but they currently favor good yields. We have a strong biofuel program supporting record demand for soybean oil and the other edible oils, and thus far, strong soybean crush through the summer and probably through next marketing year for that matter as well. But that's not enough to cause us to run out of soybeans. We have a strong corn export program, and that will likely continue into next year as well, with Brazil focused on using its corn for ethanol production. But that too is not sufficient to cause us to run out of corn over the coming year. Now, based on what we currently know, at least based on what we currently know, but in both cases, the market is assuming no sales to Iran and somewhat limited sales to China, below what has been promised anyway. We'll sell soybeans to China. We'll probably sell some corn to China, but generally the expectation is that we won't sell as much as promised. There's good reason for that. Iran doesn't want to buy from us, and China doesn't have a good track record for keeping its promises buying U.S. commodities. The one exception being the 12 million metric tons of soybeans it promised to buy from us in the current marketing year, which it did do, and it has taken shipment of virtually all of those at this point already as well. But what if the United States does use Iranian funds to buy U.S. commodities for the Iranian people, as it says? And what if China does keep its promise to buy 25 million metric tons of soybeans each year for the next 3 marketing years and 17 billion in other ag commodities on top of those soybeans? That would dramatically change the balance sheets. Unfortunately, we won't know if either will happen for several months. So that leaves us in this pattern currently of looking at weather forecasts and production estimates for the time being. But longer term, this is going to be the story to follow. This is Arlan Suderman. We'll come back to you with more updates as they occur. Be sure to like and subscribe to continue to get these updates on the global situation.